Welcome back to the Trend Checker. I welcome you to the new series of the Trend Checker in which we will cover all the topic. In past videos we have learned about Trend Checker A basic to advanced understanding. Now we will see in this video about Trend Checker B. If you want to get yourself the Trend Checker indicator, you can go to the website trendchecker.io. Link is given in the description, and you can scroll down and select any of the plan, and our team will get back to you within 24 hours. Also, if you want to read more about Trend Checker, we have created a mini Wikipedia about the Trend Checker in which you can read about any topic that you want to read. If you don't want to read that long, don't worry, we will cover all the topics one by one in this series. So without wasting your time, let's get started. Now, in past Trend Checker A basic and Trend Checker A advanced level video, we learned that market behaves in a market cycle, right? That market cycle is formed in higher high, higher lows formation that gives an M pattern that break the previous low and create a lower low, lower high formation that gives us a W pattern. Then again the market shift to the upper direction and gives higher high, higher low formation, right? And this is going to continue the process until the end or market closes, right? So this is the basic structure of the market. Now imagine, along with the market, imagine first of all, before we go to the charts with the Trend Checker B, let us understand the Trend Checker B technicals, how Trend Checker B was formed, in order to better understand it, right? So imagine a zero line that act as support and resistance. Now if price is rising, that means volume is rising, right? If price is falling, that means volume is leaving out of the asset, right? Similarly, if move is going up, there is an uptrend move, that means volatility for the upside is higher. Similarly, if price is going down, price is falling, if there is a crash, that means volatility for the downside is higher. Now in the Trend Checker there are two main waves. First is QQE waves, other is modified RSI waves. Now understand it as a line, oscillator that is going above and below the zero line, that gives us this formation, right? Now that we call a QQE waves. Along with it, there is a RSI wave, not the normal RSI, the modified RSI that we use in the Trend Checker B. For that we use a different color, is also going similarly like this. What they give is a momentum crossover. Basically, in simple English, this is the volatility oscillators, right? This shows us volatility for the trend. For that particular market trend, it shows the volatility. QQE waves and RSI waves both together give us different crossover at the different time. This crossover, these are the crossovers, are given by the green and red dots in the chart on the TrendChecker B, right? These are called momentum crossovers. So if you see, if momentum is increasing from the zero line, price is increasing. Also when price is taking a pullback, momentum is also decreasing a bit, but then again to increase. These clouds are always formed in 3s or 4s numbers, right? There is always a 2 or 3 or 4 numbers of the cloud whenever there is a trend running. If there is an uptrend, we will see a cloud above the zero line 2 or 3 times. Similarly, when there is a downtrend, we will see the clouds below the zero line, right? Now let's go to the chart and understand the TrendChecker B. These are the TrendChecker B. Whenever you open and apply the TrendChecker B, go to the settings. All the settings are default that to be used. On the style, you will see a TC1 wave and TC2 wave. Those are basically a QQE and modified RSI waves. And if we understand about both QQE and modified RSI, that we call momentum waves, from now we will call them as momentum waves, because it represents the strength of the momentum, strength of the trend, right? Now if you see, just we see about the momentum on the chart. Whenever you see, this is the zero line on the TrendChecker B, right? And the blue momentum waves are the color coded blue that representing up move in the market, and the purple momentum waves are representing the down move in the market. Momentum is never negative. We are showing the negative values here, but momentum is never negative. Momentum fluctuates between plus 40 to minus 40 region. If you see, there is a plus 40 here and there is a minus 40 here, right? There is a plus 40 and minus 40. So whenever a momentum is above the zero line, this is the zero line. Whenever is momentum is above the zero line, it is coded as blue color. Whenever momentum is below the zero line, that is coded as a purple color, right? Now what this means is, if momentum increasing from 0 and above, that means the momentum for the uptrend is increasing, right? Volatility for the uptrend is coming into the market. Similarly, when momentum decreases from the zero line, it goes below the zero line, that means volatility for the downside, for the down move is increasing, correct? Momentum, it represented at minus, but that does not mean it is minus. It considered as momentum increasing for the negative move, for the downside move. That is called negative movement, negative momentum, and the positive momentum. There are two momentum, positive and negative. So above 0 it is the positive momentum, below 0 is the negative momentum, right? Now when you see, there are green dots and red dots appear time to time. This is red dot, this is green dot, this is green dot, this is red dot, like this, right? What that means is, whenever a QQE wave and modified RSI wave cross over each other, they are going to give you a crossover signal by dots. It can be a red dot, it can be a blue dot, green dot. Green dot represent a bullish momentum crossover and red dot represent a bearish momentum crossover. Simple. That means if a red dot appears, that means price is going to go down now or retrace a bit. There is a green dot, that means price is going to up now or retrace up. a bit, right? Along with these small green and red dots, when you see, there are many big red dots and big green dots as well. Basically what they represent is, whenever we get crossover above this white line, we will get a big red or green signals. That means when the line is at 25 and minus 25, right? Plus 25 and minus 25. Whenever we get momentum crossover above plus 25 line, then we will get the red dot, right? Whenever we get the crossover below minus 25, we will get a green crossover. That is clear. Now understand this like this. This region, this rectangle that I am drawing, consider this region as resistance and this region as support. Similarly, that we use in RSI for oversold and overbought zone. Similarly, that same technicals we can apply it to the TrendChecker B. That rectangle we can use at oversold zone and overbought zone as well. What they mean is, whenever momentum approaches or reach to that rectangle, for the above rectangle, that means strength for the uptrend is higher, and whenever we get big red dot, the crossover of the momentum, that means the move for that trend, the strength for the trend is fading away. That means we might get a pullback or a movement shift in the market, right? Similarly, when we get a big negative momentum approach to the zone rectangle below the zero line, that means we are soon getting the momentum fade away for the negative momentum, and soon the positive momentum going to increase. That means price is going to increase, right? The higher the time frame, the higher the confirmation of the signals. For the TrendChecker A and TrendChecker B, it can apply to both. Higher the time frame, higher the confirmation of the signal. Lower the time frame, lower the confirmation. That means we need to use, we have to use other factor into consideration before we put in a trade, right? But higher the time frame, higher the confirmation. Now that is the TrendChecker B momentum waves. Now in the momentum waves, we also get bullish and bearish, hidden and real divergence. If you don't know divergence, what they mean is, basically, if momentum wave increases but price decreases, that gives you the divergence. Similarly, the divergence we use with the RSI, same divergence rule applied with the TrendChecker B as well. There is a hidden and bullish divergence. Both will be represented by a green line and a red line. Whenever we get a bear divergence, it will show with this line with written notification as bear. When we get the bullish divergence, real bullish divergence, it will be notified, represented by a green line saying bull divergence, right? When there is a hidden divergence, it will put H initial on the TrendChecker B, that represent it's a hidden divergence, right? We will go deep into the divergence on the markup and markdown phase video. For now, it is the basic of the TrendChecker B for the momentum waves, right? I hope the momentum waves is now clear for you all. Now in the TrendChecker B, there is another most important thing is MFI, that is money flow index. If we remove the RSI and momentum waves, we see that there is a green and red clouds oscillating above and below the zero line. Now for example, imagine if you have a plant at your home, you plant a tree at your home and you daily give water to the plant. What will happen? You are giving water to the plant, it will grow, right? Similarly, when any asset receives a volume in the market, if any asset receiving the volume, that means the asset price will increase, right? Similarly, when any money is removing from an asset, that means that asset price will go down because money is shifting to another market, right? So this is modified money flow index. It is not normal money flow index that you see on different indicators. It is modified money flow index. That is not a volume. There is a big difference between volume and money flow index. Money flow index represents the volume that is coming and the difference of the volume delta, right? Green means volume for the buying side is coming into the market more than the volume for the selling side is coming into the market, right? If there are more buyers in the market, it will be represented as a green zone, green cloud, right? If there are more sellers in the market, that means more money is leaving into from the market, that will show as a red cloud. Now that does not mean if there is a green cloud, the selling is not happening. Selling is happening at the same time, but buyers are in strength than sellers. Similarly, when there is a red cloud, that does not mean there is no buyers are in the market. There are buyers, people are buying, market makers are buying, but people who are selling are in more quantity than people who are buying, right? Now this cloud represent money flow index. As the money flow index rise from the zero line, volume increases in the particular asset and price rises. Whenever we see oscillation of the money flow index is decreasing, that means money is starting to leave from the market. So we can see a pullback. Now we apply all the settings in the trend checker and see it with the chart. Now if you see on TrendChecker B, on this example for the Bitcoin US dollar Coinbase chart, for this particular example, let's start from here, right? Now in TrendChecker B, there are two waves. There is an anchor wave and there is a trigger wave. In the TrendChecker basic strategy, how to take entry and exit, we will discuss in the next video. But for now, understand that there is a momentum wave. In the momentum wave, there is an anchor wave and the trigger wave. What is the anchor wave and the trigger wave? Understand that as see this zero line and this big wave and there is a small wave, right? Now this called an anchor wave and this called a trigger wave because the momentum has increased. If you see, there is a momentum increase, that means strength for the upside movement is increasing, right? So this is the basic strategy to trade with the TrendChecker B. If you see an anchor wave and a trigger wave, this is your entry point, right? Whenever you get the crossover here and price cross above the TrendChecker 2 line or the TrendChecker line, that is 50 EMA, you can take the entry, right? Now if you see on the chart, as the momentum increases, price also start increasing, right? As the momentum increase, price is also increasing. At the same time, when we get a crossover, this big red dot, we see that momentum is decreasing, money flow index is also decreasing, and we get a small pullback. Now we know that market behaves in a cycle, that we know higher high, higher low formation. That means whenever we get the trigger wave, this is the trigger wave, we get another move upside, right? So as you see, momentum increases, price increases. Whenever money flow index increases, price increasing. Momentum decreases, price also tends to get decrease or goes sideways, right? As Bitcoin is very volatile, if you see, whenever we get a big green dot or the red dot, price goes sideways and take a little pullback only. But if you check on other page such as Forex, you will see whenever we get a big, this is the Cardano by the way, let's go to the this is also a great example. If you see, whenever we get a big red dot, price come down a lot, right? Now for the Forex, let's see. In the markup phase, this big red dot are not most important, because in a markup phase, price tends to go up. That means it is going to reverse to the zero line. As zero line react as a support zone, it will go up again, right? But when the momentum is fading away, we get a big green dot, and that maximum decline in the momentum, and at the same time maximum decline in the money flow index. That means price is going down. But that does not mean the markdown phase is starting. Markdown phase has a different definition that we will see in the markup and markdown video, right? In this basic understanding, understand as if momentum is increasing, price is increasing. If momentum is decreasing, price will get a pullback. Similarly, when money flow index increases, the volume increases, price will go up, and money flow index decreases, price will go down. And if it is below zero line, that means there is a definitely markdown phase, right? So this is the TrendChecker B. We have gone through a TrendChecker B, momentum waves, divergence, hidden and bear, money flow index, and this is the simple and the strongest indicator in the market that is accurate up to 85% and more. The higher the time frame, higher the confirmation, and the result will be insane. You can trade any trade format with the TrendChecker indicators. It can be scalp trading, day trading, swing trading, or binary trading as well. We are going to update few more things in the TrendChecker B in the near future. For example, we are going to add the real RSI or the VWAP into the TrendChecker B, so it is more easy to understand the market behavior and the market structure, right? For now, revise the TrendChecker A basic level, and then understand the TrendChecker A advanced level. More you learn, more you watch, more you will learn many things, because TrendChecker is the only indicator that you need for your trading. You don't have to use any other indicator in the market. That is why it's amazing. That is why it's life changing. If you like the video, do give a like, share, subscribe to the channel, write down your questions in the comment section. I will answer them, or you can join our Telegram channel. It is free to join. I will answer there as well. See you. Be happy. See you in next video. Thank you so much.